Hey everybody, it is Tuesday, June 8th, 2021. All right, Bulls and Bears, we got one of the largest banks in the world coming out saying that there's a global time bomb, and we're going to talk about which bank is saying that. Now, we've known here that this has been a global time bomb. The question is, when and how will the bomb go off, or how is this going to implode or explode in this case? Implode, explode, either way, it's not going to be good. Well, let's take a look at this recent article here. And this one's out of CNBC. Deutsche Bank warns of a global time bomb coming due to rising inflation. What are we talking about here on this channel? What's one of the common themes? It is the rising cost of living, how wages are not keeping up with it, people are taking on more and more debt, in many cases voluntarily, people just spending money unnecessarily. But a big portion of the population is barely getting by, barely scraping by, and having to take on debt just to meet basic needs. Right? So it's a combination of a lot of different spending. Again, a huge portion of the population out spending money that they don't have to. People taking vacations. I know a family that takes a lot of vacations and they ended up in bankruptcy this year. But the way they looked at it, it was still a win-win. They got to go travel a lot and spend a lot of free time and leisure activities, and now they get to discharge the debt. And then in other cases, you have people that are very careful about their spending, and they live a lifestyle that's not so fun. They'll go home, go to work, come back, pretty much the same routine every day on the rat race, on their hamster wheel of debt, and they just work to pay off debt. And so it seems like in some cases, the people that just go out and spend money without regard to being able to pay it back, seems like they live the best life in some cases. All right, but back to this article, global time bomb due to inflation. Well, don't worry, because the Fed, they say there's not enough inflation and we need to keep interest rates low for a very long time because inflation is not enough. That's what they want you to believe. All right, so just think about this. We have a bank warning of a global time bomb because of rising inflation, and we've got a Fed, the money printers, saying that interest rates have to stay low because there's not enough inflation. All right, you figure that out. Let me know down in the comments, please, about how this came to be. Most on Wall Street and the Fed see inflation as a temporary problem that will ebb as special factors fade away. Right, special factors fade away. Isn't that an interesting choice of words? What are they talking about? Now, here's what Deutsche Bank economists had to say. Inflation may look like a problem that will go away, but is more likely to persist and lead to a crisis in the years ahead. That was the warning from Deutsche Bank. Now, Deutsche Bank, one of the biggest banks in the world, one of the banks with the most exposure to derivatives in the world. And many people are saying if it weren't for the money printers, that Deutsche Bank would be insolvent. All right, on to a different topic. We have many people choosing to leave the labor force. Job openings set a new record of 9.3 million amid economic reopening. All right, this is another CNBC article, but something kind of caught my attention in this article. Let's go down a little bit. 9.3 million openings is a new record, by the way, but here's something to pay attention to. Quits, which are seen as a gauge of worker confidence, rose considerably to 3.95 million. That's an increase of almost 11%. So think about this. We have an increase in the number of people quitting their jobs. During a time where 20 million people live in households that are behind on their housing payment, prices are rising at the biggest pace in many, many years, in some cases, many decades. But we still have people quitting their jobs. Is something wrong with this picture? Are people just getting fed up with the rat race? You let me know what you think. Are people just getting tired of just working to pay off debt, only to go back to work again and to pay off debt? Well, it's starting to look that way. And take a look at this next chart. This is a Bloomberg article, frozen but not forgotten. U.S. student loans are coming due again soon. But on the topic of being on the debt hamster wheel and never getting off of it, take a look at the yellow line. This is people aged 62 and older and their student debt. Look at the big increase. They're the biggest increase age group of all the age groups. 62 and over, still with student loan debt. Right now, these student loans, they're going to have to be, at this point anyway, starting to be paid back in October. There's been a freeze. There's been a moratorium on the payments for about 40 million borrowers in the United States. 40 million. So this October, they're scheduled to resume. Now, something tells me that if they don't push it out again, kick the can further down the road, then you're going to see a lot of pain in this population, 40 million people that have student loans. Right? So just look at how backwards everything is, right? Record numbers of people quitting their jobs, record job openings, people are choosing not to work in many cases, tens of millions of people in households not paying their mortgage payment and their rents combined. Record student loan debt's only getting higher. Oh yes, a student loan debt, another time bomb to keep an eye on. You let me know, will 40 million student loan debtors be able to resume their payments in October without seeing a lot of problems? Okay, finally, let's talk about this article right here, Market Watch. Americans face a mounting risk of getting their brokerage accounts taking over. Cyber attacks. And can you imagine logging into your retirement account that you've been saving for who knows how long, maybe 20, 30, 40 years or more, who knows, but you've worked your entire life and you log in and your money's just gone. So the digits on the screen say 0, and this is what they're saying out of this article. And they're saying that the SEC and FINRA is going after these brokerages that are not doing enough to keep their customers' accounts safe. But this article points to some statistics that are pretty concerning. Takeover fraud, or accounts being taken over, the attempts increased by 250% from 2019 to 2020. So the bottom line is, be very, very careful of where you keep your money. You could wake up one day and those digits are just going to be zeroed out. And that's why you need to continue stacking, continue to have some money out of the system, in my opinion. Just my opinion. I'm not telling anybody what to do, because you could get your house broken into and get your safe stolen, and there goes your life savings. So be cautious, diversify. Security, keep that at the front, at the priority. And keep stacking. That's what I'm doing. Link down below. SC Bullion, in my opinion, that's the best place to buy it. Good prices, best service, best shipping. Never had a problem with SC Bullion. Link down below. People ask me, yes, I'm still buying at these prices. Could something jump out of the shadows and cause massive deflation and cause a credit freeze? Of course, yeah, we could have a major power grid outage, and maybe it'll be another cyber attack on the power grid. Who knows? Everything could go dark. But unless something big like that happens, something unexpected, we're looking at inflation, inflation, inflation. And at some point, the dam's going to break, and the real value of silver and other precious metals, but especially silver, which has been really, really restricted in price, eventually it's going to snap and it's going to take off. So link down below, SD Bullion, that's where I get mine. And yes, I'm still buying, not investment advice, but do your own due diligence. Thanks everybody for being here. Stay well, stay safe, keep stacking, and be careful with your digital money. Stay well, everybody. Bye for now.